Hello, 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 hello. I am so excited tonight. Y'all listen, tonight is going to be such an amazing show. It is nothing like getting into a position to where you can better yourself and your family. So I am so excited to have these ladies on to join me tonight. I look forward to having you all engaged. Listen, post your comments, ask questions. Tonight is the night for you to get down and dirty into what we're talking about. So often we go into situations like this so tense and we scared and we don't want to talk about these topics, but tonight it's gonna be light, it's gonna be fun, it's gonna be informative. Grab your pen, grab your paper, take notes, and also make sure that you communicate with these ladies. But before we get the show started, I definitely want to start with my affirmation, and that affirmation today is: it is time for you to get everything that you asked for and more. Do not let anything stop you from going after what you want. 2023, it is time for that. Do you hear me? It is time for that. So anything that you have a vision about, anything that you're wanting to go after this year, listen, the Bible says to write the vision and make it plain, right? But you're not just writing it out, because faith without work is dead. So you're going to go ahead and start putting your feet into action and start moving and making plans for that thing to manifest. Okay,
Yeah.
so before we get started, I do want to let the ladies introduce themselves. Go ahead, Miss Elisa.
Kendra, first of all, thank you for having me on the show. That affirmation, I always like to say 2023 is for me. Because guess what? I have helped everybody else launch their visions, and 2023 unselfishly is for me. So thank
Okay.
you for having me on the show. My name is Elisa Denise. I go by the name Elisa Denise because uh, two-time divorcee, and the last name hasn't been determined yet. So let's just go by Elisa Denise. I'm an
I
insurance
like
agent.
it.
I like to keep it funny. I'm an insurance agent with Globe Life, and I'm here to answer your questions and just kind of dispel some of the myths about life insurance. Thank you.
All right, welcome.
Hi everyone. First of all, Kendria, thank you so much for having me. Happy to give out some good information. My name is Kiera Taylor. I am a licensed financial coach, and I'm here to help bridge the gap between the wealth gap with Black families.
Yay!
All right,
Need that
Kiera. All
information. Come
right.
on, I
Thank you,
can't
thank you,
wait to
thank
hear
you,
your
thank
segment.
you. I can't either, right? It's so necessary. So, guys, listen, I brought on the ladies tonight because I'm going to tell you something. As we were closing out 2022 and we have come into 2023, I have seen so many people that are near and dear to me. I'm talking people that I actually know, not just people that I'm seeing on TV. I have seen so many people pass away, right? And so, as we know, when they're passing away, there are bills to be paid, right? And so often we talk about, oh, well, this person's posting a GoFundMe account, or this person making fish dinners, or this person is doing this, and this person, and all the while we saying that we actually may have to do that as well because we're not secure, right? I saw a stat the other day, and it says, I found it. It said 52% of Americans have life insurance. 52% of Americans have life insurance. But guess what, y'all? 100% percent of us are going to die. Only
100%.
52% of us have that. That means that there are millions of people who are leaving their families with financial legacy risk, with the burdens of how they'll be able to pay bills, and putting all the work and time on other people. Listen, one of the best things or the best ways that you can show your family that you love them is by having yourself secure when you go on to be with the Lord, right? So, how can we find ways to go ahead and do this now and not leave our families with burdens, right? It's just like when someone passes away, think about it. Are you going to want to leave your loved one to have to worry about, okay, how am I going to pay for this funeral? How am I going to take care of these kids? How am I going to pay this mortgage? How am I going to do this, or that? No, just allow people to mourn, right? I don't want to leave people with stress. Like, I want to be able to leave people with the gift of generational wealth, with the gift to be able to take care of themselves, with the gift to be able to take care of grandkids. So tonight we are going to dive into it. We are going to talk about generational wealth. We're going to talk about life insurance. We're going to talk about wills. We're going to talk about trust funds. We're going to talk about debt. We're going to talk about it all. So any and everything that you have that pertains to this particular episode, please go to the comments, drop your questions, drop your concerns. I'm going to post it up for the ladies. We're going to answer them. And then afterward, as we close the show, if you want to connect with these ladies, they will leave their information so you can connect with them. But listen, y'all, this is a topic that we cannot move past. So as we go into it, I want to start off by asking, what is life insurance and how does it work?
So basically, life insurance is a safety net. It's a safety net, meaning that, as you said before, it allows you to pay into something now in small increments, something that's going to pay out to your family in a larger increment. Let's take, for instance, a $50,000 life insurance policy. It begins to increase in cash value or gain cash value. What is cash value, Lisa? Glad you asked. Cash value means at year 2, you can go and look at your policy, look at the schedule of payments and say, oh, I have $1,000 or $2,000 in that, and I have a plumbing bill for $500. Rather than going to my bank account and withdraw that money, let me just borrow from myself. So it's doing a couple of things. It's saving you money, and it's also making you money. But the benefit of it, it has a death and a life benefit. The benefit of it in your life is that you're able to withdraw from it. The benefit of it in your death is that your family does not have to go deplete their savings accounts. They don't have to get together, argue, fuss, and fight over who's going to pay for this. Well, that was your sister, well, that was your friend, that was your wife. So it eliminates the need for chaos. It also provides for your family, if you should choose to. If you get a larger policy, it can pay for your final expenses, and it can leave a death benefit to your family where they are able to keep the excess. So if you had a $50,000 policy, right now funerals or final expenses are about $15,000. That would allow the remaining $35,000 to go to your family. And how far ahead could that push us? So that would also give your family a head start, a jump start, or a running start is what I like to call it. So that's what life insurance is in a nutshell.
That's good. That's good.
Very well said. So for me, I tell my clients, life insurance is income replacement, right? So if you are head of your household, or if you're in your household and you're bringing in income, life insurance is essentially something untimely was happening.
It's breaking up. It's breaking up a tad bit here.
Can you hear me now?
Yes.
Okay. So I'll start over. So what I tell my clients is that life insurance is income replacement. So if you are head of your household, or a person in your household that's bringing in some income, and something untimely was to happen to you, that life insurance is there, like she said, as a safety net to replace that income, so that your family won't have to worry about if you have dependents, your family won't have to worry about how am I going to take care of them? How can I maintain the lifestyle that that person was given to me before they pass away? So life insurance essentially will replace that income that was taken away when you unfortunately, passed on, or what, replace that income. So, yeah.
That's necessary, and that's so necessary, because that's one of the main things that we consider is like, this was a two-party household, and now it's going down to a one party household. How do we supplement that income? Right. So that's good. So going into it with life insurance, I mean, most people the people who have it may have it just at work, right? So they may not have the independent life insurance, so they don't really know costs and things of that nature. And then the people who've never exercised the right to go get it, tell us, like, is it affordable? Is it accessible? Like, how can we go about getting that information?
I'm so glad you mentioned that, because that is one of the That is probably the main objective that I get. Oh, I have it through my job. Well, I always say that is so awesome. But what if you lose your job or your job loses you? Now what? So you started this job at 20 years old and you could have had a premium of about maybe $30, but now your job loses you or you lose your job at 50 years old and now you're having to pay the premium at the age you are now. So why not? I mean, let's be honest and let's be real. This is 2023. How many people really have job security? That's your job is based on your boss's emotions. That's what I like to say, or your company's emotions. If they feel like they don't have a need of you anymore, they can simply decide to, look at their bottom line and let you go. Personal story that I like to tell is that the main reason why I got into life insurance is because I've always known the importance of it through my father. He's always told us responsible people have life insurance, right?
Yeah.
So I was one of those people. I have life insurance through my company, but guess what? In August, my company lost me. So guess what? 7 days later, I was like, oh, wait, Elisa Denise, the responsible one, no longer has life insurance. I ran over to Globe Life on 1960, and I was like, hey, I need some life insurance. I knew exactly how much I needed. They helped me along the way with some needs assessments and kind of told me, no, you need this much. And so we did that, and they were like, we've never seen anybody this enthusiastic about getting life insurance. I said, you know why I'm this enthusiastic about it? Is because I didn't need it on my way over here. I didn't have to use it. My family, my daughters didn't have to say, oh, my mom passed away and she was so loved. Can you guys donate to a GoFundMe, or let's do a fish fry on Friday and try to get back with the funeral home on Saturday to see if we have enough. Because guess what? If you really love someone, you don't want them to start with zero. How selfish is that to pass along and your family has zero? So with life insurance, it is very affordable. And the way I like to work it is I like to see what you need, see what you can afford, and we will find you something within your budget because we're able to insure you as little as $2,500. I always tell people, start with something, and you can add to it, but start with something to let your family know, like Kendria said, that you love them. I mean, that's like one of the highest forms of love to me if you have life insurance.
And it really is. I look at it like this. If you can walk in your closet and you have, I don't know, $5,000 worth of clothing or shoes in your closet. And really, most people, they have 15 pair of Jordans and 15 pair of Gucci's and 15 pair of Louis Vuittons. They have all this and then yet do not have life insurance, which is probably, it's a fraction of the cost of what you're spending on these tangible things, right?
Right.
So I'm looking here. I don't know if you all can see what I'm posting up in here. I'm going to put this towards you. It says most jobs, life insurance can be bogus. People need to ensure that they read the fine print in those life insurance policies from work. What is one of the nuggets that you can tell us about work or about company life insurance?
So the main thing I like to tell my clients when they say, oh, I have life insurance on the job, is that you cannot take your policy from work into a funeral home and say, I'm going to pay for the funeral with this policy. What you have on the job is called a group policy, and you cannot take a group policy to a funeral home and pay for your funeral. You have.
I'm hearing you, but it's like it's going in and out, the volume of it.
Okay, can you hear me now?
Yes, loud and clear.
I have to hold my phone up so you. Okay, so insurance on the job. So when you have insurance on the job, you have what you call a group policy. You cannot take a group policy into a funeral home and pay for the funeral costs. You have to have something called the individual policy. So that will be outside of your job. And with that, you can take it into your funeral home and say, I'll pay for my funeral with that. And then typically jobs, when you have life insurance on the job, they don't offer you more than like your annual salary. So you're not getting a $50 policy. You're not getting $100 policy. You're getting maybe whatever your income was for 1 year. That's all they're offering you. So with the individual policy, what we do is we take our clients through like what we call a dime exercise, right? So we look at how much debt you're in, because when you pass away, your debt does not go away. That does have to be. We look at how much income you're making annually, and we multiply that by 5 or 10, because we want your family to be paid for 5 years, 10 years after you pass away. And then we'll look at how much mortgage you have to pay, and then we'll look at your children's education expenses. And so we'll add all of that up, and we'll find out how much coverage you actually need, right? And then after that, how much can you afford? And then from there, that's how much life insurance.
Okay, that's good. It was very choppy. But I was able to make it out. Maybe you can try to log out and log back in, or check the volume part on there, just so we can be able to get that good information from you. So while she's doing that, Elisa, I want to ask about I saw an analogy called DIME. I don't know if you're familiar with this. And DIME is the acronym. It stands for debt, income, mortgage, and education, right? That's what the DIME is. And it says when you're trying to calculate your how much life insurance you may need, right?
Yeah.
It says that you take your debt, right? The D. You take all your debt, consumer debt, anything you borrow, right, is debt. So you take all your debt, you take your income, and you multiply that times 10 is a good variation of what it said. You take your mortgage, which is your asset, how much you owe. You take your education, potentially not your student loans, but maybe your education for college, for a 4-year degree for your children, right? You take that information and you use that as a good rule of thumb for how much you may need. So like I took my information down, right? I used my debt, my income. I don't have the mortgage, but the education. And it seemed like for me that I would need like $1 million policy, right? So I kind of like tried to calculate some things, but off the top of my head, I was thinking, okay, it might be anywhere from $50 to $70 a month for me to get $1 million policy, right? Have you ever seen policies of, first of all, what do you think about that DIME analogy? And then have you ever seen policies of that magnitude, $1 million policy, range anywhere from a $50 to $70 a month rate?
Well, so you do know, so with the way life insurance works, it's based on a few things. One of the things based on is your age and your health, right? So me being 53 and someone, I'm thank God I'm in perfect health. Me being 53, a healthy individual, and someone else being free with pre-existing conditions, the actuaries and those people who make the rates, they're looking at how much is going to cost us to pay out this individual. But that assessment that you just used, the DIME, that's a pretty accurate assessment. We use something very similar to that, and we call our software a needs analysis. We sit down with you. We do sit down with you and discuss your mortgage, what year you're in, what is your balance. We discuss your needs for your children. How many children do you have? How much do you have saved? We do know the cost of inflation. We look at your debt, your current debt.
We're getting froze here.
Well, while she's what I was saying before my phone started to go in and out, we do perform the DIME exercise on all of our clients. So we go through how much debt. So we give our clients a snapshot of their financial situation. So we'll look at how much money you're bringing in, how much debt you have, and then we'll assess how much life insurance you need based off that DIME exercise. And so I think where she was going was, and this is what we do as well. We will, so life insurance, so the cost of life insurance will depend on your age and your health. And so if you were to get $1 million policy, if you're in good health, you could potentially be paying $50 to $70 for a $1 million life insurance policy. But again, it would depend on your age and health.
Okay, that's good to know. That's good to know. So with that being said, you all are talking about health. So is it hard if you have a pre-existing condition to secure life insurance for yourself?
Okay. So it's different for every person and their condition and how long they've had it and so forth and so on. So I would typically do the life insurance app with the client. We'll go through every health question, and then we'll send it to our underwriters. The underwriters would decide if we're going to approve or deny, and then also are we going to pay a higher premium. And so when typically we see people who do have health conditions turn away from life insurance because maybe they have been denied before. But I really work with my clients to see if we can get you any type of coverage. Maybe it may be $25,000. We may not get the $150,000 that you want, but can we get $20,000? Something for your family to have once you pass away. So it's not hard. We just may have to do a little bit extra work, and I will work with you to get there.
That's good. That's really good to hear. So though that's more people who are most often is people that are older, but some younger have also pre-existing conditions. You hear a lot with the younger generation. You hear that they say, I'm eating good, I'm working out at the gym. I still have time, so to speak. Mm-hmm. Most of the time you hear with the younger crowd that they still have time. Would you agree with the statement, because you're young, you don't need life insurance?
Absolutely not. We never know when our time will come. So it is absolutely imperative that we have life insurance. I do know that, when you're young, a lot of times when your parent has life insurance on you, it'll drop off after the age of 25. Okay. So you're covered all the way up until 25, usually, if your parents have life insurance on you. After 25, you have to get your own policy, right? Right. But I just want to tell this quick story. I was with someone, partying up, whatever, and I had never talked to her about what I did. I offer life insurance. And so she was with her brother, whatever, they were having a good time. The next day she posted he had passed away. He was probably about 19 or 20. And, in the midst of that, she says, can anyone support his GoFundMe? And I'm like, oh my gosh, I should have had the conversation with her, or at least with her and with him, because I could have helped that situation, and it took maybe 3 weeks for them to, get that person buried. And it was so sad to see, but you never know when your last day. And it's so much better to get life insurance when you're young, because you're typically healthier. And when you're older, health issues start coming in, and we're looking at age, so it may be more expensive, and sometimes it can be harder to get coverage. So it is definitely better to look at life insurance when you're young.
Yeah, and I'll piggyback on that. I always like when we were young once, I still consider myself fairly young, but when you're younger, you kind of think yourself as invincible. You don't really think about death. You don't even think you're ever going to die. But as we live, we're going to die. So I kind of pose to the younger generation, you insure your car, you insure your valuables. What's more valuable than your life? You need to insure your life. And like my friend in the middle, someone call you my friend in the middle. Like my friend in the middle said, when you're young, your rates are going to be low. So you'll have lower rates, and you're healthier. You're working out at the gym, and that works to your advantage because you're healthier. When you start getting in the 50s, you start facing high blood pressure, and that could be something that could to make your rate even higher as an older adult, a more mature
So
adult.
let me ask you this, Elisa. Let me ask you this. Are there okay, so let's say that, okay, you know what? We have life insurance, right? We graduated to the point to know that we need, not only do we need life insurance, that we have life insurance. At that point, are there any stipulations around what you can use your life insurance for? Can the check be cut to anybody or any organization? Can I say what I want done with it? Can it be designated for where I want my money to go?
Yes, your life insurance is you're insuring your life, so your life insurance is yours. So what you do is you specify that in your policy. You name your beneficiaries. Hey, if anybody out there needs a beneficiary, my name is ELYSA, middle initial D, last name Jackson. Specify your beneficiaries. If there's a charity you wanted to go to, if that becomes your beneficiary. If there is a church you wanted to go to, if there's an organization, this is your life insurance policy, and the death benefit can go to whoever you choose. So that's a great question. I like that question. Thank you for asking that.
I also want to add, you can also state if you want to have it in a lump sum or in annuity. And an annuity would be, let's say you had a $12,000 policy. You will pay $1,000 a month to that person, your beneficiary. So, yeah.
That's excellent. I wanted to bring up one more thing before we move on to the next one. In training, I learned that there is a cash cancer policy, and I'm not with Globe Life. I'm not sure if the audience knows that this is a sad reality. However, this is a true reality. 1 in 3 people develop cancer. That is an alarming rate. With the cash cancer policy that we provide, the only stipulation is that you've never been diagnosed with cancer or that you're not awaiting results from cancer. It can insure you from $10,000 to $50,000 at the onset or the diagnosis of cancer. It pays you, not the doctors, $10,000 to $50,000 for you to choose what you want to do with it. My dad had cancer. He always wanted a Corvette. Had we known about this and gotten that in his younger days, $50,000, he could have taken $30,000, gone out and bought that shiny red or black car. He lived for 3 years past a diagnosis. Or he could have said, okay, I want all 3 of my girls to take off for 6 months and just hang out with me. Got $50,000 on the table. So there are things that I'm willing to educate everyone about. And when I say everyone, I do mean everyone. This is my passion. I want to educate you on the importance of knowing what's available. So that's one tidbit I wanted to add.
That's good. That's good stuff. So let me ask you this, Pierre. With having life insurance, you have yourself financially taken care of as far as your arrangements, and then you have made a designation for your family members. Is that designated in the will, or is that specified with your life insurance policy, how you want your money to be allocated?
Okay, so you would, of course, name your beneficiary. You can't hear me, right?
Yes.
You can. Okay, so you would name your beneficiaries in the will, and I mean, in your life, in your life app, you would name your beneficiaries, and then when you are writing a will, you would have directions. That's where you will put your directions. How you want that money paid out, when you want the money paid out. Basically, your will is the directions of how you want your possessions to go.
Okay.
Yes.
Okay, and what is a trust fund?
So a trust fund is something that goes into effect while you're alive. So a will is goes into effect when you pass away, after you perish, and a trust goes into effect while you're alive. So the trust is a legal entity that you create while you're still living, and then you will put your assets into your trust fund. So that would be your property. You can put your life insurance in there. That would be any assets that you own, right? And then you would have trustees,
Okay.
and your trustees would be kind of like the people that would take over after you would pass away.
Okay. So if I have life insurance, and this is to either one of you. If I have life insurance, let's just say I have a $200,000 policy, right? And I have a beneficiary, right? And let's just say my beneficiary may be, I'm just gonna throw a name out there. My beneficiary is Bob for my life insurance, right? And then I have a will, and my will states that Amber she's the one who ensures that my will is carried out the way it says. Does one take precedence over the other, or is it, or how does that work?
So for life, so let's say whatever company that you have your life insurance for, whoever is named the beneficiary on that policy is the only person that will receive that money.
Okay.
So if you have in your will that something different, it won't be able to be.
It won't supersede whatever the life insurance says.
Right.
Okay.
But Amber could be your person who is we call it a reliable relative that can give the directions of what to do with the money. So Amber can tell you like, oh, Bob, she only wants you to have 300,000 of that 600,000 policy, $600,000 policy right now. You know, so she can tell you what your will is, but she can't take the money.
Okay. Okay. Cool.
Would that person be considered? A great point you made. Would that person, Amber, would she be considered like the executor?
Yes.
Okay.
Yes.
Okay.
I'm learning some good information here too.
I mean, because I've always heard people say like you need to have a will, right? Mm-hmm. And so the importance, if I'm understanding, the importance of the will is to designate a person or persons to give directive for how you want the finances to be allocated.
Right.
Okay.
And guess what? So, if you become my client, we're able to give you a legacy will kit that's valued at $500. That's why I can't wait to collaborate with you. We're able to give you the will kit. This is valued at $500. We'll give it to you, and you right here, your clear and concise directives, and you get it notarized at a bank or by any notary, and now it becomes effective. So that's another way to avoid conflict. You know exactly where you want your items to go. Why not go ahead and get that done while you're alive and in your right mind?
So your company offers that as well, and Kiera, you offer that as well.
Right. So in my plan that I offer a will and I offer trust to establish a trust. With that, you will receive a lawyer for 24/7. And that lawyer will also carry out the duties after you pass away, making sure that everything goes well. And then you will also receive we have a whole package deal. Let's see. You will also get like documents that they will look over all of your documents, make sure they are sealed. We can talk about that. Because we offer, it's like a whole list of things that we offer in our will package.
Yeah, I mean, and if we have viewers here, definitely we have both of these ladies available offering their said services, so you can definitely reach out to either or both of the ladies. Also, so my next question is: if you have a will, will it take away the option for the government to make a designation of your assets?
Yes.
Okay, that's good to know. So that's another thing that we want to make sure we legitimize how our funds will be allocated. We can always have life insurance, but once that life insurance is paid out, if there's any additional assets that are obtained by the person, then they need to also have a will to be able to designate where this money is going, or that money is going to the government.
Correct.
Okay.
Correct. Yes.
My Lord.
Estate planning, it definitely can be an uncomfortable subject. It definitely is time consuming, but you would definitely be grateful that you did that. Your family would be very grateful that you did that. It would definitely save the drama.
Yeah, you definitely want to do that. So I appreciate all of the information you've given us for life after death and preparing for life after death for our family and creating that generational wealth for families. But while we are still here living, right? Do you feel like death is stopping us Black people from closing that wealth gap?
Yes, absolutely. Absolutely. Most times, we find that our clients cannot properly save money because they have too much debt. They have no budget in place. They have no financial education. And so I really work with my client to educate them on how we can tackle this debt. So I take my clients through a process called the debt stacking program, right? And so that program, we really just work together to eliminate your debt. We go through a consultation process. So we look at your income, we look at how much debt you're in, and then we'll assess the situation to see how much money can you comfortably set aside to tackle this debt. And then once we get that taken care of, let's save and let's invest or whatever it is your financial goal is, to create that wealth that you're looking for to reach that goal.
So. Okay, that's very good to know. How do you get off that pay? How can one realistically get off that paycheck to paycheck mindset? You know, some of us are so conditioned to work to get paid to pay the bills, and then to start over to work to get paid to pay the bills, and that extra money that you're talking about to start alleviating the debt. Like, how do we get out that paycheck to paycheck mindset? How do we even get to that place to where we can have extra money to pay off the debt?
Well, first I would say changing your mindset. Mindset is everything, right? But my biggest thing and what my mentor always says is keeping up with the Joneses. That's why a lot of us fall into that. And then we are not saving. We're not, planning ahead. We're living paycheck to paycheck, right? So, really, it's living below your means. We all know what we can and cannot afford. You know, sometimes we just have to let our friends, flex in front of us, but you know that your time is coming. Really, because you're supposed to be driving a Toyota and not that Mercedes, which is okay. That's not saying that you shouldn't do nice things for yourself. Always treat yourself and appreciate yourself, but let's make smarter financial decisions, right? So, we know that our job with inflation happening, our jobs are not increasing our pay as much as inflation is going up, right? So what I always tell my clients is let's think outside of the box, right? Let's think, how can we increase your income? So increasing your income, finding an extra source of income is a really great way to combat the living paycheck to paycheck. That doesn't mean increase your spending, but let's work together to increase your income and come up with a plan to save and maybe invest, right? So yeah.
That's good stuff. So with that being said, could you give us a quick tip on how we can start eliminating debt? Like, what's that wisdom nugget that you can share with us? Something that can help me to, let's say this week, where I can start eliminating debt.
Yeah. Let's assess your finances. Let's see. Look at your bank account. You can look at it from the last 3 months. What do you constantly spend your money? Okay. And then we'll look at what can you eliminate? What can you live without? We know we need insurance. We know we may need our car to get back and forth from work, but do you need that subscription to HBO? Do you really need that subscription to Netflix? Where can we eliminate? And then let's work on a budget. I do this exercise with my clients. We really look at your finances holistically. And so it's where can we eliminate, And then where can we add? Where can we add some value? Where can we help you save? Are you paying too much in car insurance? Are you paying too much in life insurance? Let's try to see if we can cut back, and then can we add?
That's good stuff. That's good stuff. You gonna make me go look, because I know I spend a lot of money on eating out.
Yes.
Like if I spend a little more money in the grocery store, I probably can stretch that food and not eat out every day. So that's
but
a good tip.
I also want to add, if tackle it one debt at a time. Don't look at the credit card debt and the student loans, and let's focus one at a time.
You know what? Let's before I, because I was going to go ahead and wrap up, but before we end it, the student loans, right?
Mm-hmm.
Student loans has plagued so many people, right? Mm-hmm. And unless it's like you're gonna die still paying student loans.
Mm-hmm.
How? First of all, to your knowledge, what is the importance of paying off the student loans? And then, secondly, how can we get to a point to where, or do the student loans affect us or keep us from getting that generational wealth?
So yes, to answer your question, do they affect us? Yes.
Yeah.
And so everybody's situation is different, right? But because it depends on how long you've had the loan, what's your interest rates and everything. So my advice would be to come to consultation, but come get a consultation. Let's look at, let's see if we can tackle this debt. Maybe with maybe consolidating, maybe just setting aside a certain budget for just your student loans. If they're not in deferment, I know that they can kind of take a toll on your credit and everything. But like, let's pay on it, and let's pay towards the principal and not the interest. I think that that's a big deal. When you're making payments, make sure you're making payments towards your principal and not your interest. I'm not going to say not towards your interest, but you want to make sure that the principal is being paid down. And so that's really the wisdom nugget that I would leave to, like, let's look at how we can tackle that debt without overspending.
That's good stuff. So if someone wanted to contact you, can you drop them your information? Also, upon you sharing it here, please also go ahead and drop it in the comments as well. I ask that you share it here so those on YouTube can have the information. Mm-hmm. And then when you drop it here below this video, it's in our Facebook group as well.
Mm-hmm. Okay. So do I just tell them my information?
Yeah. Okay. How they can contact you.
Okay, so my name is Kiera Taylor. I am a licensed financial coach. My email is KIERRA Taylor. So my first and last name 665@gmail.com. My Instagram is IGOTHEKEY. So that's I got the key. IGOTHEKEY. And I am looking to help, like I said, help bridge that financial wealth gap, but I'm also looking to recruit, train, and develop other coaches. If you're looking for another source of income. So
that's good stuff. I started this live off. I started this episode off by saying that if you are looking to elevate yourself, if you are looking to go after that goal, that vision, that dream, this year is time for that. Mm-hmm. That's how I started this episode off. So I want to close this episode out saying it's no better way to do it than to secure yourself financially. One of the biggest things that keeps that generational gap from closing in is debt. It is burden, it is stress, it's those things that are mounting. And so I think that we could take the information that was shared in this live, we can take that information and we could implement it into our lives. We talk about changing the narrative, we're talking about changing the culture. When we get the information, then it's time for us to take that information and then implement. Holding on to the information is not gonna bridge the gap.
Right.
Okay. Actually implementing the information is where the gap starts closing in. So if you are looking to get life insurance, if you are looking to get credit evaluation, if you are looking for debt to manage your debt, if you are looking to invest, if you are looking to just taking a look at your finances in a whole. Please don't hesitate to reach out to Kiera. Please don't hesitate to reach out to Elisa. Both of these ladies came on, shared some wisdom nuggets. They shared this information so that they could be a part of the process with you going from what I like to say, from and to. Like we're going from and to, right? So I ask that you follow up with these ladies. I will tag them on this live video. Again, if you need to reach out to them, feel free to do so. You're also welcome to DM me as well. And this is a part of seasoning the world with salt, right? Each one teach one. So I do thank you so much, Kiera.
Thank you.
Elisa, oh, hold on. Elisa is on here. I'd like for her to go ahead and leave her information. Elisa, please share your information with everyone on how they can contact you.
Okay, I am Elisa Denise on Facebook, my first name and my middle name on IG. I am _Elisa Denise, DELYSA Denise. And I think, are we giving our phone numbers?
If that's up to you.
Okay, and my phone number, I can be reached. I'm pretty much a nocturnal, so I work at night, I work in the morning, work all day, trying to get everybody insured. My phone number is 832-886-9005.
Okay, so without anything else being said, I just thank you all for joining us on this live. Again, I will tag the ladies to this video. Please feel free to reach out to them. Listen, on YouTube, I am at The Real Be Salty. On Facebook, I am at Be Salty. On Instagram, it's _Be Salty _ I look forward to you all reaching out to me, becoming a part of my community. I am here for you. We are going to make this, we're going to bridge this gap one way or another. I may not be able to reach the masses, but if I can reach the 1, 2, 3, 4 of you, then the 4 of you can go out and reach someone else. So in that way, we will reach the masses. I thank you ladies so much for joining us, and I will see you all next week. And as always, be salty.
Thank you.
Thank you.